All right, let's get to your pick for Q1. What are you excited about? Where are you seeing the opportunities?
Yeah, Frank. So for us, and as it relates to Q1, we really like regional banks. There's been a lot of interest in obviously financials, and we get started in earnings in earnest next week. But as I look at regionals, they've had quite a recovery since the SVB collapse in 2023, up around 88% from the lows. But last year was a little bit of a consolidation year, only up 7%. And I think there was some private credit concerns in the back half of last year. So I think that has kind of pulled the position back a little bit. But as I look to 2026, and I think the backdrop is constructive, I'm looking at the steepening of the yield curve, which generally speaking is a little bit more accretive to margins for regionals than it is for money center banks. I'm also looking at loan demand coming back online in earnest as the Fed appears to be more accommodative going forward. And also M&A activity. I think that's going to be a positive catalyst for the regional banks. So I like these subsector plays as I look to 2026 and beyond.
All right, I want to talk to you about that M&A story. Are you saying M&A when it comes to the regional banks being acquired by bigger banks, or do they merge? Because we have seen a lot of bank M&A actually at the back end of last year, actually. So which way do you see that going?
Yes, absolutely. So I see it actually as banks being acquired in the regional space. So I think that could potentially be an opportunity, similarly to how I talked about biotech in Q4 of last year.
All right. Obviously, yesterday, regional banks had a very strong day. We also got that GDP forecast from the Atlanta Now. We got the trade deficit numbers showing that exports are rising, imports are lower. Do you see that as a possible tailwind for the regional banks, the idea that domestic production picks up? Are they bigger beneficiaries than the big banks?
I think so, Frank, and I think as it relates also to the consumer, I think the consumer has been hanging in there. The credit spreads have been really tight. So I think there's a couple of tailwinds that could continue to push regionals positive going into this year. So for me, I think there's a number of levers to pull here, and that's why we like regionals the first quarter. And we'll get to see how it looks, starting with the bigger banks next week, and then we'll start to see the others matriculate after that.
How much of this is dependent on a rate cut? Obviously, we get the jobs report later today. I think a lot of us will think that it'll give us some insight into the Fed, but it's not really clear what direction the Fed's going. I think after the last Fed meeting and Jay Powell news conference, he made it pretty clear. There's a lot of division on the Fed about where to go forward, and it's not really clear what happens next. And then there's potential, at least, and again, it's a possibility. We don't know if this is definitely happening, of the Supreme Court striking down the tariffs, and we don't quite know how the central bank's going to view that.
There's no doubt about it, obviously, Frank. So, from a dissent perspective, we've seen the most dissents that we've seen in the last 6 years. So there's definitely some moves on both ends of the curve there. So for me, I'm not so reliant on what the Fed does. I think directionally going forward for the next year or so, we do expect rates to go lower, but I'm hanging into what the consumer is doing. I'm hanging into the yield curve steepening. I think that's the major factor for us as we look to margins and loan growth continue to come back online. So I think that's why we like regionals here as a play in the first quarter.